Good morning, everybody. It's Jeff Scott. It is the 18th, Sunday at 9:35 a.m. Obviously, at this hour, futures are not out. Welcome to this week's rendition of my top-down review. I titled today, Investor Worries Rise on White House Follies. I know that it's not atypical to see turnover after the first year or two in a White House. This one just seems to be taking on a tenor of its own in how many people are changing. But change can be good and change can be bad, and I think it's too early to say which way this is going to go from a change perspective. Disclaimer, as always, is for educational purposes only. I'm a doctor, not a broker. I am not independent, which means I pay for the tools that I use. Trading involves risk. You and you alone are responsible, especially if we talk about options. If you're not well-versed and educated in options, I refer you to the Options Industry Council website for some great educational and risk awareness material. I title my trading, Be Your Own Guru. I'm not a guru. It should be your own guru, as taught to me by Ian Woodward. I've mixed the learnings of CanSlim, improved by Woodward and Brown, made hyper by George Lee, position size money management of Van Tharp, and then really how to trade, when to buy, when to sell, position size. Actually putting this to work, I learned the best from John Person, author, mentor, friend, software developer, and golfing buddy. So upcoming live meetings, there was tepid at best interest in the April 6th meeting. I'm sure part of it was short-dated and probably people just didn't want to come. So I canceled it. So as I didn't take any money from anybody, the couple people that responded, I said I need to have at least 5 paid attendees, and it didn't look like that was going to happen. I'm coming out there anyways for George Lee's summit, our seminar. I'll probably speak over 3 days, no more than 3 or 4 hours. So most of the time I'll be like the others in the audience, listening and learning from George. So that'll be the last I mentioned, the April 6th. And disappointed a little, but it was going to take extra work to get out there, so it is what it is. What I need in my desert isle besides high-speed internet, I need TradeStation and Thinkorswim. I need HGSI and EdgeRater. Everything else is gravy, but I can do it all with just those 4 products. Speaking of HGSI, here's the website. Again, I'm independent. I get nothing for you going here. You click on free 30-day trial, you get a 30-day trial to the software. If you do that, I've got some videos I can share with you to help you. On the other thing, investing strategies, you can see videos from Ron Brown, myself, and others. Stock patterns are cyclical. You know, we've been in this circle multiple times, and whenever we're there and it feels like it's doom and gloom and the market's going to roll over, we take another leg up. This is almost like 1 week up, 1 week down markets. It's not a great market to be investing in, although there are some places that you can make money. Every time I get to doom and gloom, we take another leg up. So I'm just saying that we're just take the top off of this curve, and what we're basically doing is oscillating up and down without breaking either way for now. So we're not far off of old-time highs, so it's hard to to not feel bullish. But at the same token, last week was a down week for most. So what do you do when you have this indeterminate area? You raise cash, you take smaller positions, and you sell premium. And that's exactly what I've done. So I like to look at certain things. So I'm going to look at these things in real life. So what I mean by Friday sector review, in my TradeStation, I can open up just a list of a lot of stocks. And I just realized that the resolution here isn't going to be good enough. But anyways, I can go through the sectors and I can see which ones were green or red. I can see home builders, which include stocks like Home Depot and Bed Bath & Beyond, for the most part were strong. Okay, material stocks, for the most part led by aluminum, paper, and chemicals, were strong. Energy. Energy was very strong on Friday. It had a good end to the week. Now let's move up for a second, and we're going to go back to the left when financials get up to the top. So you can see energy, by the way, was strong whether you were XLE, a producer, or a services. We look at financials. Raising rates should be good for banks, and banks were strong. And as I've been, basically ringing the bell, Regional banks were very strong. Insurers were mixed. Broker-dealers were strong. Credit cards were strong. In fact, Visa and MasterCard both look interesting here. Industrials and technology were strong on Friday. Now, technology mixed, staples mixed. The black ones I got to put new stocks in because they've been sold. Discretionary mixed. Retail was strong. Even tough ones like Under Armour. Amazon had a tough day by dollars, but it was only down 0.6%. Utilities, despite raising rates, were good. Healthcare was mixed. Biotech, mostly strong. Transports. We had talked about truckers, I think, the week before. Transports, including airlines, was strong. Gold, mixed. Home builders, strong. REITs, despite rising rates, were strong. Casinos, mixed. You've got the shenanigans with Wynn. Now Steve Wynn going to sell stock versus some of the others that are held up. Social media had some red, as did some of the foreign markets. So I look at that on a daily basis, intraday, to get a sense where money's going. When you start to see, like we saw with transports, an entire group is green, there's usually money rotating into that area. I also like to look at the major markets on daily and weeklies. And let's just do that real quickly using Thinkorswim. So here's the E-minis. For the most part, a lower left, upper right. Low on the chart was 1802. The high was 2878. Think about that. That's 176 difference since February of 16. And these are, I will go back to a daily real quick, but there's been a huge, as you already knew, move up in the markets over the last year and a half. So a pause at some point to refresh would neither be a surprise nor indicate that it's all over. Not as pretty on the daily. 2485, 2878 was the high. We're at 2755. Closer to the top than the bottom. Tried breaking out last week when I talked about what a perfect setup here, but it topped immediately and pulled back. But it's sitting right on the 50 at support. Did have a new PPS sell signal, which is bothersome. That's on the E-minis. The NQs a little bit better above the 17-day. Ran up and sort of just flagging here. The sell signal a little bit bothersome. The Dow futures struggling below the 50-day moving average, so weaker than the E-minis and much weaker than the NASDAQ. And then the Russell, last week I said the Russell and the NASDAQ would lead, and they did. And similar to the NASDAQ, sort of a bit of a flag pattern here, and maybe the Russell leads us higher. This is the strong part. So once again, as the same as last week, the Russell and NASDAQ best looking charts, and the Dow, the laggard. If we just pop and look very quickly at the weekly charts, and I think weekly charts are extremely important to give you a full sense of what's going on. Here's the weekly, much closer to the highs than the lows. That's not a bad chart. It's just pulled off the highs. Weekly E-minis above its moving averages. Not going to make much of what happened this past week. Similar to the NASDAQ, they actually hit an all-time high early in the week, closed off the prior week's highs, but hard to say that that's the end of the world chart. The Dow futures, again, the weakest of the bunch, sitting on the 17 daily. It's consolidating in that area. The IWM, actually in a PPS weekly buy signal, gave back a little bit this week, not far off its all-time highs. And then if we look at the VIX on the weekly, which I should have done before on the daily, but you can see the VIX on the weekly is coming back down to support. Now, if it breaks down below this 15.5, then that support will become resistance again, and that will be better for the market. It bounced a little bit this week, but for the most part, the VIX has been in a steady decline, which will be supportive of the market. And the dollar, dollar's been weak. Is it trying to break above, or is this going to be a bear flag and we have another leg down? It's interesting. Larry Kudlow is the strong dollar guy. So maybe Larry Kudlow will push to strengthen the dollar. But I'm not sure that all the pushing is going to make a difference. And you could see on the daily, it looks a little bit better. Breaking a little bit above the 50, but still clearly in a downtrend. It does have a PPS buy signal. And on the daily VIX, you could see it sitting right on the 50. All right, so that takes care of those slides. And then I also like to go to my Genesis, because in Genesis I can have on the same slide daily, weekly, monthly. First column is E-mini, second is NASDAQ, third is Russell, fourth is the NYSE, and the fifth is the Dow. If you look on the monthlies, you could see the strength in the market. If you look on the weeklies, you could see everybody's in a weekly buy signal except for the NYSE. And then on the daily, we had sell signals come in everywhere. So long-term uptrend is good, but short-term, there's a little bit more work to be done. Now, I like to look at what are the drivers of this market. So interest rates, clearly in white on both the 10-year and the 30-year have been rising, but really didn't do much this week, and actually, especially the 30 gave back a little bit. So interest rates eased a bit. Perhaps that's why there was strength in home builders and utilities. In REITs, maybe there's some belief that the interest rates are going to slow down. Just a mention about interest rates. Fed meeting is going to control everything this week, in my opinion. They meet on Tuesday, they report on Wednesday. If, everybody expects a rate hike of 25 basis points, what could derail the market? Derail the market would be if they talk about the economy being too hot and that they raise it 50 basis points, or if they start talking up the fourth rate increase this year, which would be one more than I think the market's priced in. If, on the other hand, they back down on the economy too hot, and there was one low GDP rating I saw this week, and downplay the fourth rate hike, the market will rally. So it'll be interesting to see what happens. Now, the AD lines, it's hard to see here, but the thin white line is the AD lines. The yellow is the indices. And on both the small stocks and the larger stocks, I almost get the impression of a positive divergence or convergence, where the AD lines are stronger than price, and perhaps that means price is going to come back up. And if I look here where it's easier to see, and you look at various bullish ETFs, here's the key up here, and the TLT, that bonds traded up and stocks traded down, but the AD lines really didn't budge on the week. So I think that's probably more bullish than bearish. Breadth came down to the middle. Here's the stocks above the 200, stocks above the 40-day SMA, and most importantly to me, my 3-month or 12-week new high, new low is now in neutral. So no signal there, but it was, last week we mentioned, getting closer to overbought. Daily McClellan, you had a zero-line reject here, which might be considered bullish. Not much of a signal on the weekly. Buckets, take all the stocks in the S&P 1500, divide them up, whether they are above or below the midline of their Bollinger Bands, and then what decile within them, percent B they fall. Are they below or are they above? So what do we see? 70% almost are above the midline. That is bullish, but not excessive. And most of the stocks are in the upper part of their Bollinger Bands. Very few above and below, so this is a neutral to bullish appearance. There had been no evidence of a Hindi, although if we had more than 2% new highs on the NYSE last week at the end, we may have sparked one. So that'll be interesting to see because there's some Hindi risk here. Hindis are signs of that could portend a big correction. Only 1 out of 4 Hindis seems to be meaningful. When you get a series of them, as we did back here in January, they can be more predictive. I watch it on a daily basis. Market tone, I'm looking at the Woody indicator, greens and yellows, so bullish to neutral versus when it was bearish after those Hindis fired. Sector strength, we're starting to get a little bit more weakness pop in, so much less bullish than it was the last couple of weeks. Now I have 3 different indexes that I follow of artificial indexes that give me a sense of what the market is doing. First are the canaries. The canaries are the market leaders. over the last couple of years. They hit an all-time high last week on Friday, and then they did a bull flag off of it, actually on Monday. So is this just a bull flag off of an all-time high and we go higher, or are we going to rest for a while and come back into closer to the 50? We'll have to see. The Scott Index, these were leaders I chose back in June. At that time, this index certainly paused a lot, but it's still going up. And frankly, it held above the 8-day exponential moving average. And if anything, I would say that index looks bullish. And then lastly are a series of leaders from January before the market topped. And they're holding right at the 50 with a pocket pivot. So do we have one more bullish thrust coming? You know, I expect the market to be choppy and then run up into May, and then it's time for sell in May and go away, I guess. Know your news and earnings dates. I think the key factor this week is going to be FOMC meeting and then their announcement. Bunch of auctions on Thursday, traditional jobless claims on Thursday, durable goods on Friday, new homes, and there is some Fed speak after the announcement. This current guy, Powell, did not do great in front of Congress from a market perspective. Hopefully he's had some coaching. Big earnings week. Oracle, Lennar, FedEx, CNOOC, General Mills, Darden Restaurants, Tennyson, which is sort of a roll-up of tech and internet companies. Micron, it's a big one, it'll affect me. Nike, Accenture. So as I say down here, it's judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. There's still strong fundamentals supporting the market. Tax rate cuts, increasing earnings estimates, underlying strong worldwide markets, and a weak dollar. While news flows contribute to the wall of worry, whether it's White House roulette, FBI firings, Russian probes, Trump trysts, and rising U.S. debt and Fed rate risk. Yet this week's market likely will be driven by the Fed. Meeting starts Tuesday, decision conference on Wednesday. The words matter, and caution still warranted, although falling VIX was noted. Let's go on to my top-down review. So I always start, and I do that analysis pretty much on a nightly basis because I'm a firm believer that my performance this week is predicated by the market, not by how good of a stock picker I am. Now, the other thing I do during the day and on the weekends is I kind of have a 6-point analysis of the market. So let's put up the E-minis. And I combine some different things. Elder, person, Ian Woodward. So the first thing I look at, am I in a green arrow person buy or a red person signal? This is the E-minis on daily, weekly, and monthly. I'm in a buy signal. That's good. That's 3 points. Then I look at what's the color of my paint bar. Green is bullish. I could be going long or holding. Red is bearish. I should be going short or holding. And blue is neutral. I can do whatever I want. I got a blue, blue, and a blue. So I got 3 neutrals. Third thing I look at, where am I within the envelopes? We have a tendency to want to get back in when we go below or above the envelopes. And we're within the envelopes about. So that's good. Then I look at, is there evidence of MACD divergence, which would be red dots above, or MACD convergence, which would be green dots below. So we got some MACD divergence on the E-mini. That's a negative. Then I look at where my high jump is. 50-50 is good, and whether my weekly bond goes red or green, and it's red. So I would look at this and say this is a neutral to bullish appearance, and it's not an all-in the market. If I look at the Dow futures, sell in blue, sell in red, still a long-term buy, within the envelope, no evidence of divergences, 36 in red. So the Dow, as I mentioned before, is decidedly weaker. NASDAQ futures got out of the envelope, came right back in. They're in a buy on all 3 time frames, blue, green, and blue. Does have some MACD divergence, still red here, and up to 70 on the high jump. So weak, stronger, certainly stronger than the Dow, but like the E-minis, I'd say neutral to strong, not an all-in appearance. And then lastly, the Russell actually had a new sell signal come in Thursday, which is interesting, in a weekly and a monthly buy. So I put all this together, and I don't see a market that's rip-roaring that I want to be all in on. We don't usually look at the mid caps, but the mid caps, like the Russell, had a new sell signal. If I go down and I look at the U.S. U.S. Treasury bonds, have come down quite a bit. Here's the bullish convergence, and you can see it's popped up after a while. It's in a buy signal on daily and weekly. Longer term, it's still bearish. If I look at the U.S. dollar, going sideways, and that means gold and silver are probably not performing well. And here's gold, new sell signal, and silver also in a new sell signal. So I do that to get a sense of the markets. And again, I'm not feeling rip-roaring bullish, nor am I saying sell the farm. I'm saying be careful, raise cash, sell dividend, protect your positions. Now let's go into HGSI. And one more time, let's take a look at the markets. Let's go into Woodward and Brown User Group, full, Major Markets Plus. And you can see a list of a number of ETFs or exchanges. And let's rank them by T1, which is all price and volume. And you could see raw combo, the strength was in the small and mid caps, the Russell 2000, no shocker. Big stocks, S&P and NASDAQ 100, S&P 500 down towards the bottom. Gold and silver weak. Volatility had come down quite a bit. And very quickly, because we've done this already, let's just look at the S&P 500. You can compare and contrast what I'm looking at versus the other programs. S&P 500 is sitting right on the 50. I call that neutral, but we have seen it. We could see a bounce from here, but we will find out. I'm just checking something here. Oh yeah, I created something for somebody there. That's why we don't need to look at that. Hold on. All right. Let me just edit this chart. Let me stop here. All right, I cleaned that up. So you can see no Hindenburgs have fired. Weekly bond goes red. Squeezing on the 50. Could be go up, could be go down. Usually does something when it's sitting on the 50. That's the S&P 500. Dow Jones Industrial Average we know has been the weakest. And you could see it's really consolidating below the 50, which is much more bearish. Then I can look at the NASDAQ composite, which is above with the flag that we looked at. And lastly, the Russell 2000, which I'm just using the iShares, which is the strongest of the bunch. And it looks like it might be ready to take another leg up. Did have a pocket pivot on Friday. We talked about the dollar being weak, and you can see it has just broken above the 50, so that is potentially concerning if you are doing instruments that would be counter to the dollar. One day does not make a trend, but clearly gold and silver are responding negatively to the dollar strength. And as I mentioned earlier, the VIX has been trending down, although it's not down to where it had been at its lows. All right, on that note, next thing I like to do in HGSI is to go where the real strength is top downside is go into Woodward and Brown User Groups, 07, Industry Group Analysis. And then, as you can see, I've got 174 groups. And let's look at where the momentum is. 2-day up, I've got 73 groups. That's very strong. 5-day up, I have 64. So that's pretty steady strength to the upside. So again, we had 73, I think, and to the upside. How many to the downside? Only 5 groups to the downside. Well, that's bullish. Infrastructure, containers, healthcare facilities, internet media, and educational services. And on a longer time down frame, we have 35. So that suggests there was some short-term strength perhaps on Friday. But there's still sort of a mixed on a longer-term view. Since the short-term strength was to the upside, I then would look at the top 10 groups. We got a lot of energy, exploration, services, integrated, and probably not too far down are going to be refiners, because here's refiners and marketing, because they looked good when I looked at them as well. All right, so energy is strong. banks, investment managers, insurance, things that would like high interest rates, and surprisingly, we have REITs up here as well who like low. Telecom carriers are kind of another bond equivalent, so there are things that could be at risk. You want to buy these things when they're cheap and take advantage of their yield. So now I right-click on expiration, change to industry group, and I start to look at the things that look interesting. Now, Conoco was interesting to me last week, and it's still interesting for the same reason. It's sitting here basing in a squeeze, had a mobile breakout, a pocket pivot, and a kahuna on Friday. There's probably huge resistance around 56.25, but you could be nibbling on Conoco right here. Look at the earnings per share growth, and it pays a small dividend. Now, folks ask me, why do I use the scaled view? If we look at the volume here, you can see how high the volume is, 6 million shares. If force is price today minus price yesterday times volume plotted with a 2-day and a 13-day exponential average, stocks that have a big volume are going to come to the top. If I scaled view, I'm going to bring things up that have a little bit lower volume. Now, I don't want anything that's got less than 500 shares, so really nothing came to the top that had more than 500,000 shares. That's the reason why I scale the volume. So I look at stocks who had a big volume compared to normal, not just a big volume. That doesn't look that exciting, and neither does that one. So these are two that I would have skipped. So I use different views to bring up stocks that may have less volume to the top. So I still like ConocoPhillips. Oil gas services, change the index group. Another group of beaten down stocks. We'll go through the first 4 or 5. This is a Baker Hughes GE company, loser, big downtrend. One good day does not make a trend make, although I do notice OBV is strong. And its weekly bongo just turned green, so I might keep an eye on it, but it's in such a big downtrend, I'd be hard-pressed to buy it here. HP, another equipment stock. Rig, positive day, but down in the dumps. None of these look that exciting to me. Schlumberger, no. And then even Halliburton, the big kahuna. It's probably a good buy point. Sitting on resistance, or support rather, it's held multiple times. Did have a pocket pivot on Friday. So these guys were up on Friday, but they don't look like anything great to me. Now again, if I put the scaled version up, I pop up Tidewater. Let's see what Tidewater looks like. Had a big day on Friday, that's for sure. Yeah, kind of not real exciting. So far, you can see the story of the weekend. A lot of not good looking charts. Investment managers. I don't get this one. I thought Longfin was a biotech blockchain was a blockchain fraudulent stock that was pumped and dumped, and you can see what it did here, trading up to 130. There must have been some news on it. I know was an interesting story, listening to the CEO talking about how his stock wasn't worth what it was being marked up at. And basically, if I remember correctly, he took a stock public at a couple dollars. He owns the vast majority of the float. A day or two later, he acquired for more shares a blockchain company that had no revenue that he was the owner of. And then that next day, it shot up from $2 to $130. I just don't get it. Now it's back up to 52. And let's see if there's news here that makes sense. That's not how this world works, folks. That's pump and dump, and that's a lot of risk. Now, as I told my son, it feels great going up, whether it's real or not. But when they stop going up, they're painful. So what was the big news this week? This is probably a pump and dump firm. I've never heard of it. So I don't see anything there that explains it. It's dangerous to short these fad stocks, but I've shorted it before. That's enough said. Or if you can't short it, you buy. I've shorted stocks like this. You buy puts. I'm not even sure if options are available on this stock. But boy, that looks scary, doesn't it? I tried to short this, and they said there wasn't much available to short, if I remember correctly. I wouldn't be long this. Not a chance. Yes, it's coming out of a squeeze. It had a Bible gap up and multiple kahunas. I just don't think it's real. I think it's. I do your research. Alibaba, the U.S. holdings of Alibaba from the Yahoo sale, lower left, upper right, looks just like Alibaba at a discount. Doesn't pay a dividend. Your money's being locked up. This is a trading vehicle. I'd rather buy it off the 50, but you probably could still nibble on that. Waddell and Reed, no thank you, although it pays a 5%. So Alibaba is probably the best looking chart of the ones we've seen so far. Banks index, they'll benefit from high rates. And I've talked about regionals every week for months, and I'll go look at the first three, and then you know what I'm going to look at next. This is an expensive one, no dividend. PNC Bank, liked it last week, still like this thing. Almost the same exact pattern as the last one. God, that's too much. Almost exact same pattern. Kahuna, pocket pivot, out of a squeeze. Good earnings per share growth, pays a 2% dividend. Regions Finance, an inexpensive one, sort of hopefully at a bull flag, going to break out. Now, I could go through a bunch that have the same pattern, or you could buy KRE to get exposure to regional banks, and this will have the same pattern too, I bet. Ha! What a shocker, the same pattern. So regional banks will benefit both from regulation, repeal, as well as from rising rates. Semiconductor devices. So I've been in and out of this. I'm in Micron. I don't know if I'll be in it at earnings. I'm going to have to, maybe we'll look at seasonality in a second. So great earnings per share growth. Great chart pattern. Up near the high jump. It's had projections of $120 a share come out. Look at the volume popping in. This is not volume on a stock that averages no volume. Here's a stock that if we go back here is doing, and we can look at volume when I do this, still 23 million a share, 2014 million, here's a 73 million, 58. It's a big volume stock. We go back here and we're looking at 138 million a share, 142. That looks like a volume climax, yet it just started going right back up again with more upgrades. So look at the multiple, 9.22. Look at the earnings per share growth. The stock's going higher if it makes its earnings. Again, be careful, it's got earnings coming out. So just out of, for I hate to say the term shits and grins, but I grew up saying that. Let's just look at seasonality on that. Here's how I would use seasonality. This is one way that I use it. I scan the market, but if I have a specific stock I'm interested in, I use that for this as well. I want MU, and I want earnings, and I want it to be around all right, now I got to change it here. Quarterly earnings, and earnings around March 23rd. So now what I want to do is change that to, okay. So I see a couple things here. Right now it's clearly in an uptrend. These are my linear regression channels. It's actually above the top of the channels, which is overbought. It's growing at 217% annually. All right. So as I look unfortunately, because of this monitor, it's not going to give me everything. Oh, don't do that to me. I'm not getting all the way down here to see the data. But what I can see here is it's kind of a sideways to uptrend over the next several months. We're at the top of the channel. My guess is the stock goes higher, but I don't see rip-roaring, super strong seasonality here. The yellow is my 10-year projection. The green is my 5-year. We're at the top of a channel. Pretty steep channel. I don't see a strong seasonality signal here. Now, part of the problem is I'm not getting down to the value because it doesn't like my resolution. So let me go look at seasonality trader, or not, I mean magenta trader. Anybody from seasonality traders watches this. When I scale back my resolution, I shouldn't lose the ability to screen down here. So I think that's a problem in the software, personally. And we want to go into charts. So what does it tell me? It tells me that we're in a nice uptrend, at the top of the uptrend. We have a great linear growth rate here. And do the variable earnings scanner. So it tells me that if I wait until March 22nd, which is in 4 days, that it's up 9 out of 10, 12%. If I look down here, that'd be the variable scanner from tomorrow. It's up 9 out of 10, about 10%. So looking at it here, I see a lot more positive seasonality. I think this makes me consider more holding it. This would suggest that it goes higher. I'm not saying that the other program disagreed. I'm saying I can't get down there to see what it gave me. All right, so Micron, I'm going to raise my stops probably up close to 60. I don't want to give back profits, but this one looks interesting, although too extended. Qualcomm, with the the buy of AVGO off the table, is going to bounce around. If I was a shareholder, I'd be pissed that they didn't take the $87 order. NVIDIA, nice uptrend continues. Semtech had a Bible gap up on Thursday, went higher on Friday. That's a bullish looking chart to me, although it's been in chop and it hasn't taken out its recent highs. Good earnings per share growth coming in, not that excited. Cirrus Logic, no. Intel, yeah. So I'm not finding you great stocks to buy. I've got some good ones coming though. Computer hardware, Western Digital and Seagate are Western Digital especially is an extended stock, but it keeps going higher. I look to buy it on pullbacks like we had here for a couple of days. It's got a high jump sign, but multiple pocket pivots. This one looks great. Earnings showing down. It just seems to be extended to me. And if I look at Seagate, a lot also extended. Another great looking stock. So these have been leaders as well. Maybe not in the Bible zones, but the charts look great. And then a couple of REITs, which I was surprised to see this with the rates being coming up, but maybe they don't think rates are going to raise as fast, and that might be bullish for the market. A lot of times these are bond equivalents. Look at the earnings per share growth and a dividend yield, just as a $4 REIT. I suspect none of us are buying a lot of it. Some of the apartment REITs look the strongest. So EQT, I think, is shopping centers. Oh, okay, it's data centers. All right, so that makes sense why that was strong. Cloud-based servers. Avalon Bay is apartment complexes, so it's bounced. It pays a 3.4%. Public storage are places where I store my baseball cards because I have nowhere to store them at my house. Pull back. Looks like it wants to run again. 4% dividend. Ventas, housing communities, MOBs, everything but retail. Is it done going down? Pays a 6.3%. Cousins is a lot of retail. And office, 2.7. I think you're buying these for the yield. None of them are going to be big growth appearing at this time. Property and casualty insurance, we talked about them last week. They should be rewarded by rising rates. And you can see this is Mercury General, 5.2%, breaking above the 50 with a number of pocket pivots. Look at the volume going up. That would be worth trying to understand what happened to cause that volume spike. I've heard that Google no longer works for the news. Doesn't matter, I use FinViz. Profit, well, going up because of earnings is never a bad thing. Good earnings per share growth next quarter, pays a 5.2% dividend. Travelers Corp, nice tight over the last couple weeks chart. Failed breakout back here, sitting on support. Good earnings per share growth, 2% dividend, had a pocket pivot. Allstate breaking above the 50. All right, so are these exciting? Do I have to buy them? No, but a couple of these better than most. Progressive, this is one of the best tight lower left, upper right stocks. Still has great earnings compared to its PE. Has a dividend yield just less than 2%. So I typically go through the top 10. Apparel, Zoomies broke out. And I've been owning a couple of retail stocks, but shallow pullback. Now, Zoomies, I don't like the earnings going forward. Look at the number it had for the December quarter. This is a buyable breakout, in my opinion. Mobile breakout, buyable gap up, kahunas. It's certainly not extended, just broke above the 50. If you believe the story, I like the chart. Foot Locker, not quite as attractive chart. Buckle, a big move in off the 200. Not a big fan of this, but I do like the 50% dividend. The 5% dividend. I wish it was 50. DSW looks like it's trying to break out. It's getting back to recent highs. It actually has earnings per share growth, pays a big dividend. I do my part, buy a lot of my shoes there. Bongo Daily is green. Weekly is green. This might be one to look at. Not a great appearing chart, but wants to break out. City Trends, buyable gap up on earnings. Multiple kahunas. I'd have to understand this more. Maybe this is just not, the data's not being captured by HGSI, so I would look at other sources like MarketSmith. That looks interesting as well. So clearly retail. The ones I'm owning, just to look at, I own some A&F, which is just nice, steady. And I own some Urban Outfitters, which I just recently purchased. These fundamentals look great. Stock hasn't moved yet. So I've now gone through the top 9. And I like Canada Goose. I like Canada Goose. You'll probably see this chart again as one of my favorite charts of the week. This is one of my favorite setups. Uptrend, pull back to the 50, and then a move off the 50 with momentum. Out of a squeeze, pocket pivot in a kahuna. Fundamentals don't look great. You are just off all-time highs. You might wait, see if it takes out the all-time high. But stocks that are at all-time highs in my book usually go higher. And I mentioned telecom carriers. Let me just make a comment about these. These are, to me, this is a dividend play. You buy them at the bottom of the cycle. You can get both growth and dividend. Sitting on the 200 with a pocket pivot in a downtrend, but pays 5% on Verizon. CenturyLink, if this one doesn't go out of business, pays 12.6%. Shenandoah Telecom pays a little dividend. Sprint. So I look at all the time Verizon, AT&T. and CenturyLink when I'm interested in looking at dividend plays. And also interesting to see it making its place here, just to call it out for what it is integrated utilities. And you can see NextEra Energy. This may be as good as a chart we've seen. Weekly bond goes green, out of a squeeze, multiple pocket pivots, kahunas on volume, pays a 2.8% dividend. The problem is it's a utility, and it doesn't have much earnings per share growth, and with rates rising, utilities don't usually outperform. So I have to ask myself a question. Utilities up, REITs up, telecom up, home builders up. None of these are supposed to be up during a scenario of rising rates. So are people betting that rates are not going to go up as fast as CNBC is afraid of? It'll be interesting to see. Now, a couple things that I like to do. First of all, I want to thank my buddy Chris T, who sent me a filter, and I just want to introduce people to it. So one of the things about HGSI that's cool is a view is a combination, okay, edit. A view is a combination of a filter and a ranking module. So Chris developed his own filter to find the best stocks, and he shared it with me. Close, price, and volume. It had a kahuna, percent B change of 0.24, positive force indexes. It's been in a squeeze. Now I may add or was in a squeeze the day before. I'm going to loosen this a little bit. It was up today. It's within 8% above or 2% below the 10-day. You could change that to the 50. It has the greatest volume of the last 5 and 10 days, looking for a pocket pivot, looking for positive earnings, 50-day crossover, at least more than happened today, 50 days above the 200, and not a group index. So when I apply that, and I apply the same scorecard combo that I often use, I get some very strong stocks. Now, what we did before is top down, where I look for the best stocks in the market based upon industry group, etc. This is a pure bottoms up. So let's just look at a couple of these and see if there's anything that looks interesting. Winnebago and Polaris look the same. Strong uptrend, pull back to the 200, had a mobile breakout in a squeeze, a pocket pivot in a kahuna. A break above the 50 would have to be considered bullish. I like that chart. Steve Madden shoes. Mobile breakout from a squeeze, break above the 50, pocket pivot in a kahuna. Retail apparel. Here's apparel and textile. I like that stock. Harris should look a lot like Winnebago except sitting on the 50. Kahuna, pocket pivot, mobile breakout from a squeeze. Timken Steel, New Park Resources, Emerson Electric. It's like a Kramer loves this stock. Kahuna, pocket pivot. So this shows the power of the filter, because when I looked at my original list, I often put a scorecard on it anyways, which brings strong technical and fundamental stocks to the top. But here's a number of stocks, all of which have kahunas and pocket pivots in a squeeze, sitting on support, 7% dividend. A lot of great stocks in this filter, and thank you to Chris for sharing it with me. I'm going to open up the filter for a second and let you take a picture of it. Since I don't hand out things that other people gave me, you can create your own. So you might want to pause it here, take a snag-it picture, and then play with it. You might be able to make a better one and share it with me. I'd love to see what you come up with. But this is something that I think is excellent, and I love it when people do it by themselves. Now, the funny thing is, I think he works for this company, so he must have had a kick when he saw tight, sort of a sideways move, pocket pivot, kahuna, mobile breakout from a squeeze. And that looks really interesting, LPL. So that's kind of the power of HGSI, is using filters to identify some great stocks. You may see FedEx again on my list, but FedEx is another. So here you got right below the 50, pocket pivot, kahuna in a squeeze. I like this one a lot as well. So what I do in my analysis, I start with my top-down review to get a sense of how bullish, bearish, how much I want to be in the market, how aggressive. And I'm pretty neutral to a little bit bullish. I think we'll learn a lot on Wednesday. If they talk down the number of rates, then that will weaken the dollar and cause the market to go up. I look at a number of my favorite scans just to call out some of them for people that are new. Under custom groups, HGSI Top 50, most recent, these are stocks that show up on a lot of bullish lists. We looked at Western Digital, we looked at Micron Technology. These are some of the better stocks in the market. Not all of them are at buy points, however. They're just great stocks. I like the Sprinters, which would be under David Ghilardi, done 15 years ago. And these are done every day automatically for you. I like, under Ian Woodward, I like to look at the best of Woodward and Brown. It's one of my holdings. Bazun. Again, a lot of these are extended. This one had a big move up on earnings. See if we can break out above this level this week. I also like, under my name, squeezing potential PSR reversal to the upside. So let's pick one, Glaukos. This is a prior winner that's been sick of late. Let's go to a weekly. You can see what I mean by prior winner. Had a big run up from 20 to 50, and now it's back down to 32. Go back to the daily. What do I like about this chart? It's broken above the 200. It's right below the PSAR dot, pocket pivot, kahuna, out of a squeeze with a green weekly bongo. This is a stock that if it takes out the PSAR dot, I might want to be long. It's a healthcare stock. It's a relatively young stock. Its earnings and revenue is growing. I'd probably accept it even with bad earnings per share growth. So found that on the Sprinters, or on the squeezing right below the PSAR dot. So when we go back to one other, it'd be nice if I picked one that I know is going to work, but I don't know if I know which one that would be. I like the name of this. I don't even know what they do. Berg. Maybe they own Burger Kings. All right. So what's the key about this? Stock is at the 50. It's in a squeeze. And it's trading right below the PSAR dot. So I could actually, if I wanted to trade this, I could, this would be my get on a plane trade, which would be, I would set a conditional buy order right above the PSAR dot, and which is at 3 point. So I'd say if it goes to 375, I'd buy it. I'm not saying I'd buy this stock. It's too cheap for me. The lowest on this bar is 331. So I'd have to put my stop at 330, which means I'm risking 45 cents on a $3. Way too much risk for me to take. I could put my stop right below the 50. But the reason why I like this is it's right below the PSAR dot. And if it trades up on Monday, it will cause a lot of people who follow the Wilder PSAR to consider going long. And if the market dumps overnight on Sunday, we'll never take out my PSAR dot. I'll never go long. So that's another one of the ones I like. Going down, Morales and Catcher. How about stocks that had a viable gap up? Adobe, great stock, big damn earnings, gapped up here, viable gap up. So this will give you all the stocks that had a viable gap up. And then how about stocks with a pocket pivot as well? Here's another retail stock, Kohl's, more of a chain. Sitting on the 50, pocket pivot, kahuna out of a squeeze. So those are some of the scans that I use. And then I complement them with things like my scans that I do within TradeStation. Here's Zoomies. I would not necessarily be buying Warrior Met Coal, but it showed up on one of my scans, and look why. Here's a stock that's pulled back to the 50 and had a pocket pivot and a kahuna. These are just momentum signs. A stock that, like this one right here, okay, basing, pull back to the 50 or close to the 50, mobile breakout and a squeeze, and a kahuna. The kahuna is the signal of momentum coming in. So that's how I looked at the market. And then here's the stocks that made my buy watch list. And there's a lot of them. Some I like more than others. And maybe I'll comment on a couple. We've seen a lot of them. Again, I'm not a big fan of utilities, but I like this pattern. Here's a stock that's been down, a couple pocket pivots, multiple kahunas in a squeeze, 2.7% dividend. That's Ida Corp. Another utility that's strong is Nextera, which is one we have down here. And they actually gave us all a rate cut. Now I know why, because look at where the stock is. Multiple pocket pivots, kahunas, big volume, breaking out 2.8% dividend. Alibaba, we looked at Altababa. This is the parent. I liked Ring Energy. Let's see why I liked it. I don't remember why I liked it. You know, I liked it because, I'll show you why I liked it. It doesn't look so hot here. It looks like it's going sideways. And I probably, when I look at this chart, I get a little bit less excited. I think I found it on TradeStation. So let me go look at, and I have different indicators, which makes it sometimes look better on one than the other. It's still the same chart data. Let me see if it made it to my JP buys. No. Let me go back here. All right, let's look at it. There's something I liked. Yeah, this is why I liked it. I liked it because it is sitting on support, had a new buy signal come in. I must have seen something else because I'm still wondering why I got that excited, but I do like the fact that it's a buy off of long-term support. Check this one. I wouldn't be buying that one because I can't give you a good reason. Here's ConocoPhillips. Centene is a healthcare stock that I own, so I'm talking my book here. Uptrend, pullback, breaking out above the 50, lots of pocket pivots and kahunas out of a squeeze. That's kind of the signal I like to see. I keep going back to EC. This is one that I gave you back here. I could have given it to you back here. And it looks to me like it's setting up to run again over here. This has been a great mover for me. Obviously, pulled back off of its highs. Great earnings per share growth, pays a small dividend. I mentioned apartment complex REITs. Here's one big pullback, broke above the 50, pays a 4% dividend. And lastly, let me see, if you like truckers, this to me was the best chart. Pullback to the 50, now moving. Bunch of pocket pivots, hasn't gotten too far extended, great earnings per share growth. And then I'll just finish on, I've been looking at this stock for a while, 5.6% dividend, industrial rental stock, great earnings per share growth. It's down in the pattern, it looks like it's down going down with fry pan like bottom. This is one I'll have my eye on. If I remember correctly, TRTN. And I know you don't all have the person stuff. despite me trying to get you to buy it. I get nothing if you do. I just think it's super strong. It'll never be in HGSI because he doesn't license it to anybody. Here's Triton. And the reason why I like TRTN is it's got a new weekly buy signal. It had a high close doji on the daily. Again, sitting right on support, which is this green line. And this could run all the way up to 40.41, which is a 25% move. So on that note, I'm going to say goodbye again, just in case you joined it, you didn't pay attention in the beginning. Based upon lack of enough interest to make it worth me doing all the work, I'm not going to do, not going to do a program on April 6th. I will be participating lightly on George's meeting, probably 3 or 4 hours over the 3 days. Thanks, everybody. Have a great day.